Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, November the 18th, and I'm Eric Wilkinson. You very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, how that comes in to impact the markets with some of my market analysis, and I'm going to do the same thing for you folks here in these daily market commentaries, but I'm going to go a little bit further. We're going to talk about option strategies I'm implementing into my portfolio based on those assumptions. And what I've done for you all is laid out some specific guidelines in order to find the right option strategy for your given assumption. We don't just pick option strategies out of the hat here. What we do is we look at our underlying, we find our directional assumption, and then we follow that roadmap that I've laid out for you guys to find the right strategy to increase your probabilities of success. All right, so without further ado, let's get on with the economic data, see how that's impacting the overall markets with some of my market analysis. And across the pond, we got some CPI numbers out of Great Britain. 0.7% expected to be 0.5%. This is Consumer Price Index. Core CPI, which strips out food, alcohol, energy, things of that nature, coming in at 1.5%, expected to be 1.3%. Then moving for the rest of the European region, we got final CPI coming in at negative 0.3%, expected to be negative 0.3%. Core CPI for European region in line with expectations at 0.2%. Then we move back over here to the United States. We got building permits coming in at 1.55 million. Permits, that's not unexpected, in line with expectations there. Housing starts beating this number on the street, coming in at 1.5 or 1,530,000, expected to be 1,450,000. So much better than expected there. Again, not a real surprise there after we saw the construction numbers earlier on this week. If you guys remember, our NAHB came in yesterday, knocking it out of the park. So housing starts, not really a surprise here, coming in gangbusters. Also a nice revision to last month's number. Here in the United States, we also got our crude oil inventories coming in at a build of only 800,000, expected to be 1.7 million barrels. No revisions to last month's number, so a bit more of a drawdown that was expected. Obviously, we're seeing it show up over here in crude oil. Now, remember yesterday we talked about OPEC talking about production cuts. Now we're seeing a bit of a drawdown here in crude oil inventories. That's obviously giving crude oil a bit of a boost today to the upside. I was hoping we would see this break down below $40 a barrel, but that is not looking like the case, especially even further today. We get a lot more information about the vaccine coming out of Moderna and Pfizer. Now, Pfizer's is a little bit, they're saying Pfizer's efficacy rate is better than Moderna's, but Pfizer's is also a little bit more temperamental, where it needs super cold temperatures in order to keep that virus, or that vaccine, effective, or so it doesn't lose its strength. So that is one of the downfalls of Pfizer versus the Moderna, but they're also saying that this vaccine might be able to be distributed in December. So that is much earlier than what was expected. A lot of people calling the call that we would have a vaccine by the end of the year ridiculous. Well, here it is, and it looks like we're going to have that. So markets are celebrating that. Looks like it's a bit more of a rotation out of some of the stay-at-home stocks, the tech-heavy, and into some of the reopening trades. And we'll talk about that a little bit further as we go along. But crude oil still holding on to its gains. Gold futures can't get above that 1923 anytime soon, and that is probably going to wait on any type of stimulus before we start seeing a real move to the upside. Bonds still moving in positive territory again today after getting up into that 172 handle we talked so much about recently. We also were testing the 173 handle earlier today. I do expect bonds pricing to go higher, which indicates that interest rates are going to go lower, because they are not going to raise rates anytime soon, as we're hearing from the FOMC members talking about that, and Williams will be talking again today pretty shortly here, probably in the next 30 minutes. All right, the VIX is coming off, but we do have still a mixed bag, as you can see here, with the Dow Jones Industrial Average up 106 points. Now, keep in mind, we talked about this 3,000 mark in the futures being printed overnight, and the retest was also overnight. So the market during the day session really wants to try to make an attempt to print those overnight trades in the day session, because otherwise it's not real in the eyes of Wall Street, if you will. But I think we might actually even get to there today with a bit of a boost and some good economic data, or some good news out of here and across the pond with the vaccines. We got most of that information already, but I think that we'll start hearing more and more about that stuff as we go along here. And I think that the Dow Jones really wants to print that during the day session relatively soon. It looks like that is going to be a target before we start seeing any type of rollover here in the equities. All right, NASDAQ is slightly in negative territory, but well off the lows of the day. And we can see with the E-mini S&Ps, they are in positive territory. So we're seeing the Dow Jones E-mini S&Ps moving higher, negative move here in the NASDAQ. And that's because, like I said, that's the reopening trade, right? Where we're rolling out of that tech and into some of the blue chip stocks that have been struggling. I've been talking about this for a couple of days, that I think that people are going to start covering some of those trades that they've done very well with in the tech sector and start looking for value. E-mini S&Ps break down inside day. Yesterday felt like an inside day. Wasn't quite, but that's because Monday was such a tight range. Today we're having that type of Mondays range here and creating an inside day again. And markets are going to struggle to move out away from this area, I think, for the next month or so. All right, so like Apple is in negative territory. We could say something like Google. Google is in negative territory. Zoom, names like that were really doing well during the reopening trade are struggling today. Things like Target, I missed the earnings on Target. I would have probably played this to the upside as well, but I didn't play it. And what they did is came out with 150% increase in online uses, or their digital platform. So they have done very well. That's giving a rise to names like Walmart as well. Also, for that reopening trade, we could look at Disney. Disney's moving higher today. We've got MGM. We could look at, say it's moving higher. PENN National is moving higher as well. So all of these stocks for that reopening that I've been talking about are doing well. Some of the ones where we've already seen that move happen. I don't know, is Tesla even, what's Tesla doing? It's moving higher today nicely. But most of those reopening trades are doing very well. We could even look at Uber and say, it's in positive territory. Lyft is also going to be in positive territory, most likely. Yeah, there we go. So the reopening trade looking very good. The stay-at-home trade looking a little bit iffy right now here at this point, but I think it's more of a sector rotation than anything else at this point. That's all I've got for you guys. I haven't added or subtracted anything from my account at this point. I am looking at a couple of those covered calls, like in PENN and in IBM. I've got the IBM November 120 calls in there that I'm short. Those go off the board on Friday, so I'm just going to kind of ride that out. If it gets called away from me, be happy to have them take it away. If not, then I will continue to lower my overall cost basis on this trade and stay mechanical. That's all I got for you guys, other than the last thing we always talk about is our disclaimer. Please know your risk before getting involved in trading, and if you can't take that, take it easy.